Okay, listen up. Today I'm sitting down with Jason Graystone. If you don't know Jason, he is a professional trader. He's also the co-founder of Tier 1 Trading, and he's the author of a book called Always Free and host of the Always Free podcast. In this conversation, we dive into his personal story, from chasing security for his young family to building a rules-based trading approach. We get into the psychology that keeps you a profitable trader. We talk about why discipline beats hype. And we get his take on prop firm funding and the daily routines that make trading a true performance sport. If you want to turn your method into money without losing your mind, you're going to love this. Here's my conversation with Jason. I'm here with Jason Graystone. I'm so happy to have you, brother. Thank you for joining us.
Thanks for having me.
I really want to hear your origin story. You make so many videos, you cover so many topics, but I really want to know how you got into trading. What was the spark? What was the thing that just so got you into it?
Okay, so I had this plan to become financially independent, and it wasn't, by a certain time, but when I was 21, when I was 22, we found out I was going to have our first son, and it just kind of lit a fire inside of me to get a move on with this whole process. And I started just investing very passively. I started saving, investing, increasing my savings. And I basically calculated how long it would take me to replace my active income at my job at that point when I was 23, when he was born. And I worked out that if I saved 10% of my income at 10% per year, returns per year, I would be able to replace my income in about 20 years. And then I worked out that if I increase my savings by 10% every 3 months and I increase my income, and then basically I was trying to whittle down the 20 years as quickly as possible by methodically deploying my cash into to get certain returns. And obviously you hit a certain point where I was investing in stocks, so, large cap and medium cap stocks. I was doing
U.S. stocks?
Sorry?
U.S. stocks?
U.S. stocks mainly, yeah. Yeah, I usually just mess with the U.S. market because those are the biggest companies in the world. And,
right.
I usually just put my money where the most growth is, potentially. So I was doing all that. And then I got to this kind of period in my life where it became quite stressful because in order to grow my income by 10% per year, I had to start a business. And then so I could control my income. But in doing that, because I was kind of abusing the business to pay myself as much as possible, it was growing, but it was really rocky because we kind of couldn't afford a new manager, but needed a new manager, all these kind of things. And it was quite stressful. So I started to look at higher speculative endeavors, such as online poker for starters. Basically, I just needed to increase my returns and get my overall pot to about 18 to 20% per year. And, I was looking at kind of
figure out that poker thing. They figure out a methodology just like you can with trading. It's pretty remarkable. I don't know what it is, but
it's exactly the same. But I would say poker's harder than trading, and that's purely because of the fact that you have to make a decision every 90 seconds. With trading, you don't have to do that. So you've almost got this added pressure of having to make a decision as well.
Yeah,
and that
decision fatigue, if you will.
Yeah, it's tough. It's tough. So I finally spent a lot of money in the markets on lessons in the financial markets. And after for just under 3 years, I was consistently profitable and on my feet. And then very shortly after that, I'd matched my income, managing my entire portfolio through passive, semi-passive, and my swing trading efforts as well. So when I was about 29, just before my 30th birthday, I was in a position where I'd matched my job income, if you like, or my lifestyle costs with my trading and my investing.
And the motivating factor was financial freedom. You had a child now. It was time to take things really seriously and to really intellectually work it through.
Yeah, I think for me, I've they say that your values are shaped by the time you're 7, and whatever you perceive to be missing most as a child, you value most as an adult. And for me, that was definitely true. So, I perceived this big lack of security as a kid.
Did you grow up with
no
scarcity?
Father figure, broke, we were moving place to place and mum trying to make ends meet and no electricity and the bailiffs knocking on the door to pay the bills and stuff like that. And those are my earliest memories. So I always kind of was driven to be, have security, basically. It wasn't even about the money. I just figured out that money was a massive play in that security aspect, but it was primarily security driven. And then I just found my way kind of naturally.
So there was, you grew up with scarcity. And so
definitely
it was a survival mechanism on a level.
Survival. And the fact that I didn't want, when we had my son, I just felt like I didn't want him to have that same experience that I had,
Right.
Of course, there's pros and cons to that. There's always going to be ups and downs to everything, but I didn't want him to have what I had. So I thought I better get a move on.
That's a sign of a good dad. So when you very first got into the trading and you were doing stocks, you said primarily, you were doing some swing trading. Sounds like you were fairly conservative in the beginning, and then you gradually moved to being more speculative. Did you have a mentor, or did you have anybody's system that you really gravitated to, that really resonated with you?
Yeah, I mean, I had many mentors, and I still do. There's a great saying: if you empty your pockets into your mind will fill your pockets. And I've been very much,
love that.
Income first. Knowledge first, and then income. And I'm very much aware that mentors play a massive part in helping you get to where you want to be as quickly as possible. If you can find the good ones. Unfortunately, there's lots of bad ones, or
yes,
not bad, but
more than ever. And more than ever,
definitely,
especially on YouTube, it's like, who are these guys? I might steal that. Knowledge first, then income.
Knowledge first, yeah.
I love
there's a great knowledge, income, equity. That's the kind of order in which you want to focus on things. And as far as mentors go, I was lucky enough to have an institutional trader who was a friend of mine. And although he couldn't really tell me what to do because his approach to trading was completely different to how we can exploit the markets as retail traders, he was very much like, we just go in and bet against the housing market in Japan, and they move the market. But what he did tell me is there are common moves that happen, and particularly on the euro dollar and the pound dollar, and between that London session and New York session, there are patterns. There are certain things that will happen in those periods of time. And all you need to do is build rules around those moves so that you can trade it consistently and kind of ride the waves that we're creating, but do it in a way where you can capitalize more often than not. And that kind of clicked with me. I thought, yeah, I could do that. It's rule based. It's consistency. And when I went into trading, I wasn't going in it as a get rich quick. I mean, there was a little bit. I did underestimate the amount of work involved, and I did think it was a bit easier than it. I felt like it should be easier than it was for sure, but I wasn't going into it as a stupid kind of get rich quick, away with the fairies. Right. I was an engineer, and I built a business, and I was very methodical and logical, and everything was numbers and projection based anyway. So I had that advantage. And then I figured out about the rules.
I definitely hear the engineer in you. I just in this first few minutes, you are an engineer mind. I can tell you think through things logically, systematically. And there is a group of traders like that, which I'm sure you've learned too, from helping
traders do really well. Yeah, right. Engineer background.
Yeah, sometimes they can over-engineer, not want to pull the trigger. That's a common thing with engineers. But it's interesting because there are different kind of personalities when it comes to trading. But I'll let you continue. I'm so sorry.
For sure. Well, I was one of those engineers where that was where I struggled with trading, because although you kind of, as an engineer, that it's process over outcome. So it's like, if I do ABC, I'll get XYZ, and that's kind of inevitable. But when it doesn't quite go your way momentarily or instantaneously, even, there's an ego thing there with engineers where it's like, oh, that's hard to swallow. It's like, that's not doing what I thought it should do. And that's a tough one. You kind of feel like you should be cracking this puzzle when actually it's a puzzle you're never, ever going to crack. And that's what I've realized much later on. It's like something you can't really ever solve. And tomorrow is always uncertain. So your job is just to have the highest probability in your head and be able to play that probability and have confidence in that probability by staying close to your numbers and figures and journaling and all that kind of stuff. But in terms of other mentoring, I was lucky enough to be in a community with Akil Stokes, who's now my trading partner at Tier 1. And there's a guy called Jason Stapleton who was instrumental in helping me with the consistency aspect. Great guy. I owe a lot to Jason in my trading success. And then just taking from Adam Grimes. I met Adam Grimes and Mike Bellafiore. I went over and spent some time with those guys in New York back in 2016 or 2017. And it was great, to see how they treat the markets and approach the markets as well. So I've had lots of mentors, and I'll continue to have lots of mentors, knowing that I'll never actually ever become, I'll never master this. It's just my job to show up every day.
Isn't that kind of the fun part of it? It's this endless
Absolutely.
challenge.
And that's why I think a lot of people, the ones that succeed at it are the ones that enjoy it. It's not the ones that are chasing a means to an end. It's the people who just show up and it's fun. They're the ones that are going to make money doing it. And typically they are process-oriented thinkers, like engineers, IT background, military even, those types of people who have got that, they can take they're very binary thinking, So, yeah, for sure.
Right. So, it seems from what I see out there is that you're primarily trading Forex. So were you trading Forex from the very beginning? You mentioned stocks.
I was doing some, I never traded stocks. When I started trading stocks was going to be way too expensive for me. There wasn't any
thing early on.
Yeah, there wasn't any split shares and all the stuff that they do now, fraction shares and stuff. But it was really expensive to play that game, so I couldn't got involved in that. And then I learned about the Forex market, and I thought, oh, okay, well, it doesn't close. There's no gapping, and it's lower cost to entry. And at the time, there was crazy leverage and stuff like that, which obviously is a double-edged sword. But it just felt more accessible to me. And by the time that I had spent so much money on it, whether that was learning or losing not knowing what I was doing, I just felt I owed it to that particular market. And I just, naturally learned a lot about that market that kind of helped me become profitable. But yeah, I've, some futures. I prefer Forex because I just know that portfolio out the back of my hand. And, if that stopped tomorrow, then I'd be pretty stuffed.
I think you'd be able to apply everything you know on another market, without a doubt.
Well, yeah, possibly. I'd have to take a few months off, I reckon.
It's not going anywhere. That's the good news. If anything, it's only going to become more active. So slightly off topic, but you mentioned leverage. And have they reduced the amount of leverage you can have in Forex now? Or is that kind of dependent?
They have. They have. And that was just more of a responsibility thing, really, for brokers.
There was some Forex houses that blew up.
There was a lot of legislation brought in around leverage as well. So, yeah, it's a good thing. A lot of people were complaining when they did that, but to me, that shows the lack of knowledge of people going into it in the first place, right? So it's to protect you. It's a good thing. If you're excited about trading 100 to 1, you're probably not going to make money long term anyway. You know,
So it kind of brings up this question, and I've been asking everybody I've had on the podcast. It's somewhat related to leverage. So what is your feeling about all of these trader funding firms that have popped up?
Yeah, great question. I get asked this all the time. And it's funny because whenever I give my honest opinion on the majority of these prop firms, I get attacked. And you have to ask yourself, like, what is so triggering about me saying, really, it kind of brings out that these people have put so much hope in the fact that these prop firms are going to get them out of a hole. When you say something negative about them, they really don't like it because they're having it's kind of an ego thing. But I'll say this, I've spent lots of time around great prop firms. Axiom in London, Amplify in London, S&B Capital in Midtown Manhattan. And those companies are the old school, real proprietary trading firms. The whole goal of that business is I take £100 from my pocket and I say, I'm going to start a business. You trade 50, I'll trade 50. And then you trade it, and then you find other great traders to trade your precious money to grow the account, and then you share that profit with them.
But it's real money. It's real money.
That's the only goal for the business, right? So when I saw all of these kind of prop challenges pop up, I was looking at the way that they were incentivizing traders to trade, and it just didn't add up, because if your incentive is to get the best traders to make money on your money, then why would you be pressuring them to make a certain amount of money in a certain amount of time? Because you don't know when you're going to make a certain amount of money as a trader. And every professional trader understands that. So it just kind of threw up this big red flag for me. And I just saw them advertising, we will help you grow your account fast. I just saw them as a wolf in sheep's clothing, a lot of them, dressed up to pretend that they're there to help you. But in actual fact, they're making money off of your entry fee, knowing that 90% of the people, maybe 99% of the people that go into those things are going to lose over time, and they end up with your entry fee. And
I'm going to say something very unpopular. We'll probably both be attacked on this one, but
yeah, well, it's unpopular.
I pretty much agree with you, and I think it's over 92%. I read a stat on that. I've also had some communications with folks on the inner circle of one company that no longer exists. It's the gamification of the stock market. And if you've ever read a book called Reminiscence of a Stock Operator, if you read the book, it's like the ultimate classic book I think everybody should read. Jesse Livermore describes the bucket shops, where was a house. It was like off-track betting. That the people, it was a little storefront. The people who worked the storefront were taking the other side of the trade. You had like $1 margin. And that was the trade. The trade was never being sent down to the floor. It wasn't real trading. Now, there was no slippage because it was whatever came over the ticker and chalked up on the board. But if back then, the price was the 1890s, if you had sent the order to the New York Stock Exchange, you would have taken you 15 minutes or longer to get an execution, and the price would have been, the worst slippage you could ever imagine. So, they made bucket shops completely illegal. So, that is a perfect analogy. That is a great analogy for today's prop firms. I have friends in that business who probably hate me for this, but, it's the truth. That's the way I see it. Yeah. That's the way, and I don't think it's real trading. It's not, you don't learn the emotional juices of trading. You're not in that fight or flight mode sensitivity area if you're not trading with your own real money.
Oh, true. So I literally ran a workshop last week in London for traders on trading live, because there's a massive difference between trading live and trading, demo money or what have you. And we spoke about all this stuff, and it is all those cognitive biases and emotional biases that one of the guys there was a professional gambler. He'd made a phenomenal living professionally gambling in casinos. And he said that there was this analogy done where, or this study done where he said, if you put everyone around the poker table and they play with matchsticks, you know, and then you take the same game, but instead of matchsticks, it's their life savings. It will be a completely different game, and it will be the professional gambler that wins every time that it's the life savings. And it's because of that resilience, that mental kind of strength to stick in the game. And I got asked another question yesterday about automated backtesting softwares and things like that. And I just said, you can run a backtest through history on a strategy and it just says, yes, it's profitable. But what does that actually do for your brain? It's nothing. Nothing. It does nothing for your psychology going forward. You're just still on the belief that some piece of software said it's profitable. You don't actually believe that.
You're looking for the Holy Grail. You're looking for the Holy Grail. You're looking for the honestly, ATM machine that's going to just spit out the money at the bottom by just pressing a robot.
Trading is trading is 95% psychology and very little strategy. It's the ability to just trade a board game set of instructions every day, whether you're winning or losing.
I think that's why maybe people think having a bot or a program trading, because it does strip away the emotion of it. But they've been trying to figure out program trading since the 70s. So I know there are people marketing AI trading robots, like the AI is going to suddenly figure out. They've been using forms of AI for 45 years already, trying to figure out the markets.
I remember Mike Bellafiore from S&B Capital. He paid a lot of money for this team to come in and monitor their best traders on the floor, tracking their eye movement on the screens and trying to get as close to them as possible. But you just can't do it because there's sentiment and there's technical and there's skill, and it's like you have to know all of that stuff. And I just don't think you can train that. I think you can get close, but let's just say you do that, and now you're just running a bot. You've still got to watch your balance go up and down,
right?
And go through drawdowns,
right? Trusting
a bot, and I just don't. I don't think I could personally do that, but maybe
There's
some people can.
Who do
maybe
that.
I'm just
people who do that. No, I'm with you. To me, it's a very kinetic experience to trade and to trade your own money. And it's like learning to play an instrument. Like you need those 10,000 hours of looking at charts, watching, different markets have different personalities. And I'm a stock trader, and individual stocks have their own personalities. And then they have different periods where they have different personalities. So like Apple was pretty dead until it was dead for like several months until maybe a couple weeks ago, kind of woke up, and now it's behaving more like it has in the past. Even Tesla, some of these stocks, the personalities, they change. That's how I
agree. I always say that I see them like each of the Forex pairs are like employees, and they all have different personalities, and some work well together. Some support others when others aren't doing well. Some like the summer off, some like Christmas off. And it's kind of and the closer you get to those pairs and you understand those personalities, the more calm you are in going forward. Because when that it does take a slow spell, you can compare it to last year or the year before or the average of the last 10 years and go, oh yeah, this is normal. That's what it's about.
Exactly. So speaking of what we're talking about, what is your favorite strategy? What strategy has worked the best for you, feels the easiest for you? Is there
man, my favorite strategy would just be like my reversal setups on a daily time, a daily structure, big support and resistance levels, major levels of support and resistance, and then just trading a little bit of a reversal off of those and catching some of the cream off the top. I don't shoot for the moon on my trades. And on the daily, on the higher time frame stuff, it means it's much more passive. As I've gone into my trading career for many, many years, I now want to do less, and I'm really just looking at higher quality setups, better reward to risk profiles and a better strike rate. So, and that has happened because I'm now right a lot more. I take, less trades, but actually that's growing as well because I'm increasing my strike rate, but my reward to risk profile's optimized so that I've squeezed as much profit out of it without it being painful and having be in the trade too long. And I've got tight stop loss now, or as tight as it can be whilst maintaining some breathing room. So I don't unnecessarily get stopped out. Sorry?
Do you automate the stop? Do you tie the stop to like some indicator, for example, a moving average of some sort, or?
I usually play 9 times out of 10 in my strategies. I'm using like an average true range to place the stop loss outside of the average true range over a 14 period, and that's it. Doesn't usually change from that. I do trail stops, but going back to your first question, my favorite strategy is just a quick reversal off of some daily higher time frame structure and capturing like a 2.5, 3-to-1 setup. I can get quite a few of those, maybe one of those a month. It doesn't sound like a lot, but that's where I'm happy now. I like catching those sure thing moves, and that would be if I could just do that. I'd just do that.
So much of trading is just waiting. Waiting for your favorite setup, and I know for me, not everybody, but for me, used to be the hardest part because I'm an active mind. I'm anxious to want to be productive. I think traders come into this like it's almost like a video game, and they got to be doing something all the time.
And I wish you was at the workshop the other day. We literally covered all of this stuff, and do you know what? I spoke about that, and I said what that is when you're learning something, you're putting in lots of hours and time, and you're doing lots of things at once, and you might be reading a book on trading, and you might be practicing on some charts, and you might be testing some strategies, and you're looking at multiple things. And then when you go live, you're doing nothing. You're waiting. So there's such a discrepancy between the amount of activity or work that you perceive to have been doing compared to now. And then you start doubting yourself, thinking, oh, I'm not doing enough. But in actual fact, it's normal. If you actually look back at the trades that you was taking, there might be 1 a week or 2 a week or whatever. And that's right. There is 1 or 2 a week. But because you're comparing the amount of activity or work that you was doing, of course, it's going to be a lot less. It's just like you paint the coffee shop, you buy in all the gear, you train all the staff, you open the doors, and you're waiting for a customer. It's like it just takes forever for a customer to come in. But it's kind of similar. It's nothing to do with your trading. It's just
slightly off topic. What you're saying, because I noticed from your videos, it looks like you're training for Ironman or marathon stuff, and you got your diet totally honed in, and you share it with everybody. And that is a consistent every day. You wake up in the morning. I know because I'm a similar way. I'm not training for an Ironman, but I'm 6 days a week gym and cycling 4 days a week. And for me, it keeps my mind in peak performance mode.
Yeah.
Every day you're consistent. You put in the hours that you need. Trading, you have to put your hours in, but you're not actually trading a lot of the times. It's more like preparing and stalking and waiting.
Really, that's why I have to. People say to me, like, why are you so regimented in your routine if you can do, if you don't need to do anything? And the truth is, when you have a lot of free time, you have to be more regimented to not spiral out of control, for starters, because if you can do anything you want all the time, you start to become a little bit lost. So I maintain a lot of structure in my diary. And then on top of that, I want to train my brain every day. I want to, be my own competition every day. I want to be uncomfortable in some way every day so that becomes normal to me, and I want that to be normal. So a lot of the stuff that I do, like I'm not doing Ironman, but I just did Tough Mudder, and then I'm going to Necker Island with Richard Branson, and we're going to be doing this strive, swimming 4.5K in the sea and stuff like that. The reason I'm doing that is not because I want to do it, but because it trains my brain. It keeps me sharp. It keeps me like on my toes. It makes me work for my food, and I want that. I want to maintain that.
Yeah. And trading is, and I'm going to reiterate this until I'm dead, it is a peak performance activity. If you're out in all night or doing whatever you do with your buddies till 4 a.m., you're most likely not going to trade well the next day. There is definitely a regimented part of it that you really need to train your brain like a professional athlete. At least think that way. You don't have to be a professional athlete, but get into a rhythm that's healthy for your mind and for your body. And I could tell that's your gig. So let's talk about some. I'm going to ask you like a really difficult question here. What was your biggest loss ever trading? The one that rung your bell. That rung my bell. Yeah, for sure. My biggest loss was £28,000. It was just under £30,000. And the reason it rung my bell is because I shouldn't have been in it really, and I should have come out earlier. And it was a mistake. So it really just kind of, it was a big lesson. So was it not honoring your stop or your mental stop, and you just kind of let it? You moved on over to Hope Island.
It was actually a trade that I shouldn't have been in at all. Okay. It was a trade that I shouldn't have been in. It was a very, very, very similar setup to something I traded on a closely correlated pair. But I wasn't trading that strategy on this pair, but I thought, maybe it'll play out. And it was just one of those times where I don't know why I did it, because it wasn't even that early into my journey. It was later on, which proves we all have them gremlins in us to a degree, but it went against me, and because I shouldn't have been in it, that's why it hurt so much. But
and that what was the big takeaway? It was just outside the box of your normal routine of the things you trade.
It was sorry, was that a different
What was
question?
the big takeaway? What did you learn from getting your bell rung like that? What was the big
the big takeaway was that I had just come off the back of a big winning streak, okay? And I was cocky. And I started to develop this feeling that I could do anything and shoot from the hip. And maybe I don't need rules anymore. Maybe I've cracked this thing. And it was a quick, humble experience to say, you have not cracked anything, and I'll crack your ass.
The cocky thing, it can keep coming up. At least that's been my experience. When you get a couple winners in a row, you feel like hot shit. Like, oh yeah, I think I've taken this to a new level. Let me shoot from the hip, like you say. I've struggled with this off and on myself. It's a really big deal. So I see on your website that besides you having a podcast, and obviously you teach trading. Tell me about your wealth building course, your wealth building program. What's that about?
So that program, it's not something that I actively sell or anything like that.
Okay.
But it's a program that I've worked with a lot of entrepreneurs, business owners, people who have earned a lot of money and doesn't feel like they have a lot to show for it. Because something that I realized when I started trading was I had a lot of free time. So I started networking with a lot of entrepreneurs, and I realized that loads of them are great at earning money. They're actually not got any freedom, most of them. And
workaholics.
I started talking to them about what I'd done from 22 years old to 29 years old, and they were really interested. So I built this program and a series of tools, and I worked with them on it, and it was phenomenal. It was life-changing. And we will relaunch that program next year, but it was kind of the basis of what my podcast is all about. It's about being always free, and it was about free in mind, movement, and money, and how to optimize for all three of those things to build life of wealth and freedom. So trading was a small piece of the puzzle for me, but then so was investing, so was how to build how to delegate and how to optimize your daily tasks and your routine so you're doing things that you enjoy, and how to have a solid mindset so that you're appreciative and content in where you are. That's what all freedom comes from. So it's not one of those things you're going to chase that's going to make you feel free. It's all of them. And and that's what the program was all about. And it's been phenomenal. Been great to build such a
can't wait
amazing
to
community.
see it when you re-release it, and sounds really interesting.
Yeah, we'll be re-releasing that next year.
Awesome. Sounds like you've got the recipe there. So tell us about your trading incubator program or your platform, like what your website, what you teach, what.
Yeah, so tier one trading. I run tier one trading with Akil Stokes, and we are primarily just traders. And there's something to be said for traders who create a trading community, because it's different from people who have an incentive to build a business and teach trading. We were in a community together. It was a really valuable community. The community had to come to an end because the founder of that community decided that they wanted to do other things. And then me and Akil about 6 months later said, look, should we carry on? And we basically built tier one trading out of seeing what every trader had struggled with, and tried to underpin all of those problems so that the only way out would be if you gave up. Other than that, you've got all the support you need and everything. And we created this platform, and it was a very immersive, intense program, immersive. And it's just created such a phenomenal community of professional traders, people who really are not chasing the get rich quick, but actually want to make something of this. And we get to trade live every day in front of everyone. It's just.
So you have live trading rooms?
Yeah, it's like 50% for me and Akil and 50% for them, because it's like, right. It's great to be able to trade with people, and talk to people, because otherwise I'm just sitting here on my own as well. So it's
lonely business trading if you're all by yourself. Very lonely.
It is.
And the minute you make a mistake, every childhood trigger rises right to the surface, and you can get in a pretty bad headspace.
For sure. Yeah, and just having a community around me every day is more selfishly for me, that I can just talk to them. They hold me accountable. I can't just break my rules in front of those guys. I'm trying to set an example. So it's just phenomenal. Great way to live.
Awesome.
I can wake up, do my trading, share it with other people.
You have
and make it value as well. So
you have the live trading rooms.
Trading rooms. We have accountability sessions every Friday. We have dedicated Q&A sessions every Monday with Akil. It's just, great. It's phenomenal.
Awesome. Tier1trading.com.
That's the one.
Where people can find you. Awesome. So you said that you built it because you see the mistakes that traders make. Tell me what are the biggest mistakes you see traders make on time.
Okay, so wanting it for the wrong reasons for a start. So we kind of quickly filter out people who are chasing something that's important to someone else, but not important to them. Expectations. So they massively overestimate what's achievable in 1 year, usually traders. And then when they realize they have to do a little bit of work, they then underestimate what's achievable in 1 to 3 years, which is where the magic kind of starts to happen. And then they drop off. So it's kind of setting the expectations right with that, giving them the numbers. And then there's accountability, which is a massive one. As you just said, it's a lonely game. So how can we underpin that? Well, let's have accountability groups. Let's have accountability tools. So that was another one. And then the tools. So running your trading business, like money management and backtesting tools and testing tools and journaling tools and things like that are really, really important.
And there's so many of them. There's just so many of them. It's hard to know what's any good.
There is, yeah. There's so many. There's loads. And then there's access to your next steps. So funding, how do you attract investors? How do you want to grow your account? And we teach all of that stuff inside there based on my own, because I'm an angel investor as well. So I teach people how to build a contract to manage other people's money if you want to do that, how to attract investors in the first place, how to put together a pitch deck, all that stuff that you just wouldn't see in you know, a regular trading training. So
do you find that you have you have traders who are being funded by others and then they share in the profits? Is that a common thing?
Well, we have traders who get to a point where they can prove that they've got a great percentage return, but they're limited for capital. So they either got two options. They can go and work for a proprietary trading firm, a real one, or they can go and get investment from family friends or maybe a family office. We just got a guy called Sal. He's just gone to Dubai to get he's got 15 million coming in into his account, which is phenomenal, like really, really phenomenal. And we help with that. So I think a big roadblock is like the next step is me funding my account so I can actually make a living. And we wanted to make sure that we help with that process as much as possible. So we help them go out and be confident in attracting investment from external sources.
Yeah. Maybe that's why so many people are attracted to the funding, is because they just don't.
That's why I say it's a wolf in sheep's clothing, because it's not actually
really
going to give you funding.
Okay. So tell me one of your favorite client stories.
Favorite client story is in trading, or I suppose trading.
Yeah, one of your favorite trading platform, like someone who signed up for tier 1, maybe they had very little money, but they were really dedicated, just a client success story.
Yeah, I mean, it would have to be a guy called Dean, who was he was 19 years old. He was just gone to university, but he didn't want to go to university. And we kind of said, look, you've got a choice. You can either go all in on this, or, you're going to have some awkward conversations with your parents. And he did. And the beauty of him was because he had no dependents. So he had no pressure. He was living at home with his parents. So he had all the time in the world. He didn't have any expenses. And he had lots of time to dedicate and make a lot of progress quick in his trading, that within 18 months or just under 2 years, he was then funded from a real proprietary trading firm. And, he was over the moon because he could show that to his parents that there is other ways. His parents were very, very traditional.
They probably weren't
their
too
whole
excited
culture,
about him trading. Were
they
they
did
excited
not
about
want
him
him to
trading?
trade.
They weren't supportive.
They was not supportive at all. No.
Wow,
and
yeah.
even though he's doing really well now, he's making I think he's making just shy of 100 of 6 figures a year in a shared profits, which I think he's like 23 now, right?
Wow.
So for 23 to be earning like 80, 90 grand a year is pretty good. And it matches what maybe because the culture that they're from, they're really heavy on become a doctor, become a nurse, become, and, his brother, who is older than him and is a doctor, is about on the same. So if anything, it kind of proved to his parents and gave him confidence that he can, he doesn't have to go that traditional route in doing something he doesn't necessarily want to do. And now he's only going to grow from here. So then he'll have all the opportunities in the world to do philanthropy or put his money wherever he wants when he's older. So that's great. Good story.
Awesome story. So again, anyone who's interested in Jason Graystone's trading programs, go to tier1trading.com. What's the name of your podcast?
Always free. Same as the book.
Free. And tell us about the book a little bit before we go.
So the book is designed to help people measure their mind, movement, and money, and basically a strategy for each of those things, so you can be who you want to be, do what you want to do, with whoever you want, wherever you want, and then have the financial underpinning to stop if you need to, for whatever reason. So there's a lot to cover in this book, but it'll be a worthwhile read. You can get it at alwaysfree.com.
Alwaysfree.com. So definitely check that out. And the podcast, I'm sorry, you said the name?
Always Free.
Always Free.
So that you can go to alwaysfree.com. You can binge all the Always Free stuff there.
Awesome. Beautiful. Jason, I so much appreciate us doing this together, and you showing up and sharing with my audience. And I will definitely send some people your way. And one day I'd love to have a beer with you. I think we could talk shop probably forever. You ever
Hey, where do you live?
I'm in Fort Lauderdale, Florida.
Florida. Oh, I was in Florida last year, man. But
Okay.
next time I come, I'll be sure to hit you up.